Well, first off, thanks for having me.
Governor of the Bank of Canada, Mark Carney, is to take over at the Bank of England. When he steps into the role next year, he will have to deal with some of the biggest challenges to face the institution in its 300-year history. Not only will he need to navigate the city and country through choppy economic waters, but he'll need to manage some significant structural changes within the bank. The remit of the institution has broadened to include the supervision of banks and insurers, as well as overseeing the stability of the financial system itself. One of the biggest, if not the biggest tests facing Mr. Carney will be how to support a stuttering economy while paving a smooth exit from quantitative easing, the fuel that's been used to drive growth since the start of the crisis.
We all know that we're in a very unusual situation right now with interest rates at 0.5%, with massive liquidity in the system. We all know that won't last forever. It certainly won't last for the 8 years of the next governor's term. But no central bank anywhere has successfully gotten itself out of a situation like this without upsetting the economy. So a lot of work needs to be done in the bank and elsewhere to plot the path and then to indicate to the markets, to communicate to decision makers, households, firms in this economy, just what they're likely to be doing as they embark on this return to normality.
Well, I think at the moment the crisis is still ongoing, and the Bank of England isn't quite sure how to deal with it. Whether it should be monetary policy actions through the MPCs or more quantitative easing, or whether it should be other stuff like the funding for lending schemes, making funding to banks cheaper, or completely new policies, maybe trying to drive down the pound. These sorts of things the Bank of England could do, and quite which policy committees, where is it discussed, how is it accountable, all these things the new governor is really going to be in charge of as a practical management problem.
Managing structure is one thing, but there are more fundamental questions to be asked about exactly how the bank makes its calculations.
I think the forecasting model is obviously very problematic because it's been seen to be wrong in lots of ways. But I think the reason they get a lot of criticism for their forecasting model is it's so opaque. We don't know how the model works. We don't get very much information out of it. So the most important thing I think they could have is massively more transparency in what they produce so we can see what the model's actually saying, and it's much easier then to understand why it's wrong when it's wrong.
I think a lot more attention needs to be paid to the financial markets and the financial flows within this economy. Now that we're in a situation where quantitative easing is the main policy instrument rather than interest rates, the forecasting model needs to spell out just how it thinks the transmission mechanism works between a decision on QE and an impact on actual spending, either consumer spending or investment spending.
With so much to manage, it's likely that the new governor is going to have to be more chairman than chief executive. He'll need to delegate and coordinate all the different parts of the institution in order to be really effective. But if he can do that, then the Bank of England stands to be a formidable force indeed. Seb Morton-Clark, Financial Times, London.